Did you miss me?
Man, we hit 120 followers on TikTok this week. Extremely grateful for that. And that's what I want to put out there before I start with this playbook video. We're gonna be going through SMT Divergence today, as you can tell from the title. We'll be going through what is an SMT and don't care about the rest, man. Let's just start with this. So I'm gonna be showing you how I used the SMT Divergence to catch trades on ES and NQ, and they are also confluences. Oh, hold up, gotta make this neat, man. They are also confluences that you can use as part of your trading strategy, just like your order block, your breaker block, your fair value gap, all those things. You combine all of them together, you got a solid strategy, man. So without further ado, let's get into this SMT Divergence. Alright, so it's just a concept, it's not a theory, but it's when two correlated markets, so two markets that have relations with one another, do the opposite things at the same time, and it usually signals a potential reversal or confirmation that one is manipulated and the other isn't. So it sort of gives you a cheat code, man. One index is telling you, oh, we're going higher, while the other hasn't yet made the move, and that's when you can catch the trade on the lagging index, which is the one that has yet to make the move, and the non-lagging index is the one that has already made the move. Okay, if you don't understand, just wait a while, I'll explain it, I'll give you a visual example and all that, so just be patient, man. So why ES and NQ? It's because both move similarly, and honestly most of the time they what word was that, bro? They practically do the same thing every time. So when ES is bull running, NQ is also bull running at the same time. That's why I use ES and NQ. You can also use YM, which is, I believe it's YM, which is Dow Jones Index. Or is that DJ, bro? I don't know, bro, but you can use the S&P 500, NASDAQ, and Dow Jones. These three correlates, and if you trade Forex or precious metals like gold, you gotta find that the other indexes that correlates with the pair you trade. I don't know what's the correlation for the others. I only know for ES and NQ. So this is what I trade, and obviously I'm going to be going through them only on ES and NQ. Now, the types of SMT. There is only two: bullish and bearish. Simple, eh? For the ideal conditions. Now let's go back to the types of SMT. Alright, so for the bullish example, one index makes a lower low. Wait, hold up. Yes, one index makes a lower low while the other index makes a higher low. That way, the index that makes the lower low is the lagging index, because, for example, let's say ES made a lower low and NQ made a higher low. NQ is already going higher, bro, but ES have yet to go higher. That's why it's telling you ES is gonna go higher. That's how you use the bullish version, the bullish SMT. And for bearish, it's the opposite. One makes a higher high and the other makes a lower high. If ES makes a higher high and NQ makes a a lower high, it means price wants to go down because NQ is already making a lower high while ES is still making higher highs. If you're confused, once again, just be patient, man. Now, for the ideal conditions, which is where we want to take the trades at, firstly, Jake, there's got to be a better way to do this. Alright, firstly, you want to be trading at your key areas. We have yet to go through this, but key areas is just where your areas of liquidity are, your highs, high time frame highs, your previous session highs, previous session lows, high time frame lows, all of that. Those are your key areas. You can also use high time frame breaker blocks, fair value gaps, equilibrium. Do what you like, man. Alright, now you want to stack this with you want to combine them with other confluences. For example, your fair value gaps, your break of structure, your order blocks, your breaker blocks, equilibrium. You can use all of these together to get a better entry and a safer entry, which has a higher probability win rate to hit your TP. You want to be combining all of these together. Oh wait, I forgot to add the most important one, bro. Liquidity. Alright. So the best place to take trades take SMT trades is of liquidity, which is your key areas, and we're gonna have a liquidity sweep, and you want to combine them with other confluences like your break of structure, fair value gap, order block, breaker block, equilibrium, and blah 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 blah. Okay, now this is really confusing because I haven't showed you anything, but if you have, listen to what I said, write them down first, then I'm gonna give you the example right now, or if you want, you can listen to this part first, go back, and then add what I have said. So now I'm gonna give you the visual example. You gotta find some space. Bullish. For bullish examples of SMTs, you always only look at the lows. Alright, let's say this is ES. And this is NQ. Now, as you can see, he has made a low right here, and then it makes a lower low, while NQ makes a low right here and makes a higher low. Right here is your SMT. You only want to be monitoring the lows for bullish SMTs and monitoring the highs for bearish SMTs. So here, lower low. And right here, we made a higher low. This way, ES is the lagging index because NQ has already changed direction to being bullish, while ES sweeps this low and made a lower low. From there, you can take trades of the SMTs. For example, you can count this as a liquidity sweep with for break of structure, fair value gap, blah blah blah. We're not gonna go into the trading part. just know a lower low and a higher low is a bullish SMT. The lagging index is the one that made the lower low. Non-lagging index is the one that made the higher low. Alright? Now, sorry. Now we're gonna go into the bearish examples. Now, since the bullish examples, we only want to be monitoring the lows to see if there's a divergence in them. Hold up. Now, since for the bullish examples, we are only monitoring the lows, for the bearish examples, we only want to be monitoring the highs. So let's say this is ES. Jeez. Alright, ES made a higher high, while NQ makes a lower high. So, mark this out, this is your SMT. ES made the higher high, or NQ make the lower high. So the lagging index is ES because it made the higher high, while NQ already made a lower high. Alright, it's not that hard once you get used to it and you can recognize them. Also, one really important thing is for it to be a valid SMT, you have to make sure the high has already been created. Now, I want to go through this again. What's a high? A up and a down candle. What's a low? A down and a up candle. So, let's say right here, this is NQ. Let's say NQ made a higher high right here. Or NQ just made this candle, the one at 1 a.m. If the 2 a.m. candle isn't a bearish candle, it's not a high yet. Because for it to be a high, it has to be an up and down candle. Same for the lows. Right here, this is a really good example. This isn't a low. We made a low right here. We made a lower. It's not a lower low. Why? Because this isn't a down candle. It has to be a down and up candle for it to be a low. Now, when you zoom in to the 5 minute, however, we did make a lower low. So this is a SMT. But on the higher time frame, it isn't. That's why we continued higher. Wait, hold up. Yes, we did continue higher, but that's not the point. You have to make sure that the high and the low has already been created, so you need 2 candles for a high to be created and 2 candles for a low to be created. Alright, so this isn't an hourly SMT because there's no low here. We did go lower, but this isn't a low. Alright, if you want, you can screenshot this or whatever. I'm gonna leave this here for a while. Then I'm gonna go through the chart examples. Alright, okay, hopefully you got it. You can pause the video as well. Alright, now, remember when I was talking about the ideal conditions? This is really important, man. You don't want to be taking trades off every SMT you see, because trust me, you're going to be seeing a lot of SMTs. So to reduce trading on every SMT, you have to narrow your choices down and only take those that really matters. Firstly, you can trade during session opens. Like for me, I trade 9:30. I trade at 9:30, New York session open. Right here, New York session open. So I will zoom into as you can see, we have a high right here. We took out this high, and this was just yesterday, bro. That's why I'm saying all this shit works. You gotta trust me on this. It works. You just have to familiarize yourself with it and have more time on the charts, man. So we have a high right here. What did we do? We took out this high. We made a higher high because it's up and a down candle. I'm gonna mark this SMT out. Why? Because I already saw this on the chart. On ES, what did we do? We made a high right here. Right here, we made a lower high. Also, you gotta make sure you're aligning the time. Like this high is made at 2 a.m. and this high is made at 9 a.m. As you can see here, 2 a.m., 9 a.m. You gotta make sure it's the same time. You can't just randomly make higher highs and lower highs. Like it doesn't make sense. You gotta make sure you use the same high same high of the same time and same lows of the same time. Let's say if this high is created at, I don't know, 4 and it's a higher high, you don't want to care about that because this one is made at 9. Anyways, let's go back into this. We made a SMT here, bearish SMT. Why? Lower high, higher high. So we just made a higher high here. We made lower highs here. What did we do? We shit the bed. Could have targeted London session lows. Could have targeted hourly lows. And this is high time frame low too, because on the 30 minutes it is a low. But anyways, how you want to trade this? I'm gonna go through this for the people who have already traded. Who are already already taking trades. I don't recommend you to do so, but if you are, how I would trade this, alright, is this. Market open, we immediately made the SMT. We also took out liquidity. My one and only rule in trading is you gotta take out any sign of liquidity before I can take a trade. We took out this hourly high, which is Asia session highs. Then we made the SMT. So this is a valid SMT for me because we've already taken out liquidity and it's the time I'm trading. Next, I'm looking for a retrace. After we break structure, you guys have learned the 79 line. What happens? We closed below the 79 line. I'm counting this as a break of structure. We got a retrace. What am I doing? I'm zooming in. Retrace right here. Once again, after the retrace, we closed below the 79 line. What am I doing? I'm shorting on a candle that closed below the 79 line, putting it at a high and targeting whatever draw on liquidity there is, bro. We could target this. Oh, could target these lows, these lows, these lows. It's all great trades. Unfortunately, I didn't take a trade yesterday. I was out. Risk to reward isn't that great either, bro, because the stop loss is pretty high. But you could target more lows. There's so many lows for you to target. And alright, since I'm gonna give you the buy right, which is what you should do. Since ENQ is the lagging index and ES has already gone down, since it's the non-lagging index, it made the lower high. You should trade on NQ because it hasn't made the move down yet. Okay, you got it right. So trade the lagging index. For me, I do not trade the lagging index because I'm trying something out. Alright, sorry for the pause, man. I was looking at something. Alright, I'm gonna give you a... Jesus Christ. Alright, I'm gonna give you a bullish example too. I mean a bearish example. Wait, this is a bearish example. I'm gonna give you another bearish example. Right here. This isn't a good... I'm gonna give you a bad bearish example. Okay, so right here. 2 p.m. on 15 July and 17 July 2 a.m. Hold up, bro. 15 July at 2 p.m. and 17 July at 2 a.m. If you're monitoring the highs and lows every time, you're gonna find a lot of SMTs. That's why you only take those that matter to reduce your chance of getting stopped out and reduce the amount of trades you take per day. Alright, we made a SMT here. We did go down, but that's not the move I want to catch. I want to be catching this move because I trade New York session. This SMT happened when during Asia session close into to London session open, which is right here. Don't care about the time, man. It's just not the time I trade. That's what I'm trying to say. So if I had paid attention to this SMT, what would have happened? We opened, New York session open right about here. If I had paid attention to this SMT, I would have gotten stopped out because this is a bearish SMT. If I took any shorts, I would have gotten stopped out immediately, bro. So you gotta make sure your SMT is valid in a sense where it is in your trading range, your trading time range. Whenever you trade, maybe New York session, London session, Asia session. If you trade, hold up. If you trade London session, sure, you could have taken this short, but I trade New York session, so this SMT doesn't matter to me. Alright, this one doesn't matter to me. I would have gotten stopped out if I take longs, shorts. But let me give you a... Hold up, bro. My nose be bugging. Also, please do not take SMT trades during choppy price action because you're gonna see a lot of SMT. So ideally, just don't trade during choppy price action, bro. Alright, I'm gonna give you a bearish example. A bullish example. Right here. Market opens right here. I trade at 9:30. You can trade whatever time you want. July. Bro. Alright, market opens right here. If you want to know how to know which SMT is valid, you just gotta know what time you trade I haven't gone through sessions, so it's a little hard to understand this, but we have Asia session, London session, and New York session. We also have, but we don't have, we only have these 3 sessions and the overnight session, but nobody really trades those. Anyways, since I trade at New York Open, which is 9:30, I'm not even looking at the charts for the rest of the day, bro. Only at 9 to 9:30. If we made a SMT then maybe I will take note of it and take a trade off it, but we gotta see the conditions. So for this day, 9:30 market open, 9:30 market open. What did we do on NQ? We shit the bid. We took out these lows, which is at 720. All right, I'm gonna mark that out first. $720 lows right here. ES didn't take out those lows. We made a higher low. What happened? Bull run, bro. Bull run. Bull run on both indexes. I'm not even gonna go through what trades you can take because this is an SMT video, not a strategy video. This shit works, bro. You just gotta know which SMT is the one that you have to be using. Like if you took a trade off a high time frame shorts, you got stopped out, bro. So that is all I have for you. That's all the examples I have for you. Alright. When not to use an SMT, during high impact news like CPI or Powell speaking, Donald Trump speaking. I mean, Donald Trump doesn't really do much in the markets, but just avoid those high impact news. If you want to know how to check news, you can use Forex Factory, and I will go through that next time too. So don't worry about it, man. I got you 100%. All right. When else should you not use an SMT? When both indexes are doing the same thing. If ES makes a higher high and NQ makes a higher high, if you think that's an SMT, you are dumb. And don't enter SMTs prematurely. The higher time frame the SMT, the higher power it holds. Right here, if we made a SMT on the 1 minute, we could just be going in for the 5-minute retrace. That's why the higher time frame holds higher power on the SMT. I usually use the 5-minute in correlation with the 1 hour. So if I mark a 1 hourly high, I'll zoom into the 5 minutes and see if we made an SMT on the 5 minute, then I'll take a trade off those. Alright, that is pretty much all I have for you today, guys. So what did we go through? What an SMT shows you, it shows you the future. That's great, ain't it? Now, what else, man? What to look for? If you want to look for shorts or bearish SMT, monitor the highs, higher high and lower high. That is an SMT. If you want to be looking for bullish SMT, monitor the lows, lower low and lower highs. That is an SMT. And how to confirm it with entries? After you get a SMT, wait for a break of structure and wait for another confluence like your fair value gap, order block, equilibrium, breaker block, whatever you want, man. But do not trade yet. If you're new and just learned how to use a SMT, you can backtest it if you want. It works. I don't know what else to say. If you don't believe me, just don't believe me. I can't change your mind. But that's all I have for you today. SMT done. What is next? Hold up, man. Next up on the playbook, we'll be going through the 5-minute retrace. Stay tuned for the video. If you like this video, or if you enjoyed this video, like and subscribe. If you learned something from this video, like and subscribe. If you don't like this video, or didn't learn anything, like and subscribe. I would greatly appreciate it. Leave a comment if you want to. I'll reply every single one of you. I'll definitely like your comment as well. Follow me on TikTok if you want. I'll leave a link in the description, and I'll see you guys next time. Bye bye. See you.